sir, yes sir, yes sir. What's going on, family? We're gonna get started in just a moment here. Feel free to drop your locations in the chats. I'll be with you guys in just about 30 seconds. Feel free to send out the link as well. Invite anybody you know that trades and getting ready, set up for the next week here. We're gonna be going over things like fundamentals, charts, all sorts of little knowledge. So I see a few guys in the chat already. We'll give it another 30 seconds and then we'll begin. All right, family? Alright, let's kick this off. Let's kick it off. What's going on, everybody? Excited to be on with y'all tonight. So let's get me up there. Let's get the charts up there. Actually, we'll leave the news up here. Let's see who we got in the chats tonight, family. Where did my little tab go? Hold on. I can't see all your lovely comments. Let's see who we got in here. Let's go up. We got Michael in here. What's going on, bro? We got Jude. What's going on? Juan wants to look at GBPUSD. When we get to charts, bro, I got you. Johnny, what's going on, bro? Shout out to Johnny, by the way. That boy just got his live funded account, man. Mad excited for you. We should have a lit week coming up. So definitely excited for you, brother. So shout out to you. We got Riverside in the house. We got H&L Hawaii. What's that? Is that Honolulu? Is that what that is? Shout out to Sean out there in Hawaii, bro. Living it up. Got New Mexico, Michigan, Orange County, California. What's good? Cypress, Texas. Love my Cypress gang. Shout out to y'all. Clocked in worldwide. We got the boy Juju in the house. Is that who that is? I recognize that brand. What's going on, brother? Good to see you. We got New York. Michael again. What's going on? Crypto market. Let's go under 1 trillion. What's going on, Christian? Jumping right into it. Is it true that Lambo Raw is my mentor? I don't even know who that is. I mean, I've heard his name on like IG. Is that my mentor? No. All my mentors are dead. Richard Wyckoff, Jesse Livermore. Those are my mentors. Aside from the people that I trade with every day, right? Shout out to people like Sean Lloyd. Shout out to people like Clay that have been big influences in my career. But no, man. And honestly, most of my mentors are either dead, or they kind of like been trading alongside me for 4, 5, 6 years. So they're less mentor and more like, I don't even know how to describe it. Mentor is probably the more appropriate word, I suppose. But when you're learning alongside people, it's like, you know, everybody kind of, it's an exchange of value is really what it is. But no, whoever that is not my mentor. I don't know who told you that. Chicago, North Carolina, what's going on? What's up, Alex? Out in Philly, Dallas, Texas in the house. Columbus, Georgia. Jesse Livermore. Old school trader, made millions, also lost all those millions. He's a great example of a successful trader who, you know, didn't know when to stop. Basically kept exposing himself to the point that he actually lost all the millions that he made. But there's a lot of great lessons from Jesse Livermore. I learned, you know, classic tape reading from him. There's a website, if you just go to like jesse-livermore.com, there's a whole bunch of articles on his career, you know, that you can get a lot of value from. So again, these are people that I, you know, take lessons from that again are no longer with us in the markets. H-Town, what's going on? But yeah, what's good, family? Look, I'm excited to be on. There's a lot to talk about tonight. I already know markets are going crazy. Things opened with a bang on the Sunday with Friday news. That's to be expected. A lot of this is just that continued momentum from last week. Give me 1 second. I'm gonna pause this music here. But there's a lot of continuation from last week. So before we even jump into the news of this week and just a lot of the value we're gonna kind of drop, getting into charts and all that fun stuff, I want to just really quick recap the end of last week, because what you're seeing right now in the markets is honestly more of a reaction from that. There is a few, people that are probably playing rumors and future events that are coming this week. But if we just real quick, right, revisit last week's news. I don't even think we can do that on here. Can we go back in time? We go back to last Friday. Let's see. Can we just let us pull that up? I don't think it does. Apply. It does. Beautiful, beautiful, beautiful. So I want to talk about the CPI numbers, guys, because last Friday we did have CPI come out. I went too far back, didn't I? Yeah, I went too far back. What's today's date? The 12th? Yeah, so it's the end of this week. Friday, right? I want to talk to you guys a little bit about these CPI numbers, because the markets are really still pricing all of this in, and this was kind of a big influence to what we were doing, a lot last week. So let's see, real quick, let's just double check up on the chat here. Let me bring that back up here. Right, what's good? Abel in the chat, shout out to Abel. Actually, Abel, 1 second, bro. 1 second, bro. You are now a moderator. I meant to do that last stream, so shout out to Abel, bro. Always appreciate you showing love, my man. So yeah, guys, I want to talk a little bit to you about this CPI, right? CPI last Friday, right, just literally 2 days ago, came out at it came out literally at its highest record in nearly 40 years, right? Inflation continuing to rise, continuing to be an issue. We talked a little bit about this last Sunday, right, when we went over the economic calendar for last week. We had kind of discussed this. We talked about how PMI the week before that had actually come out higher, and that made us kind of believe that, again, CPI was going to continue its crazy tear that it's been on, right? We're literally sitting at 40-year highs. There's no sign of this thing slowing down, right? Even with, the few little interest rate hikes that we've had, just have done nothing to kind of curb this. And we've seen increases across the board, right? Between core CPI and just normal CPI, year over year, month over month, doesn't matter. Everything is hitting new highs, right? So why does this matter for this week, right? Why is this actually playing into what we're looking at this week? Well, as we go through the week, I don't want to get too far ahead with what we're looking at in terms of news, but if you haven't already looked at your calendar, we do have interest rates coming up this week, right? So we know that the Fed is making interest rate decisions this week. We know that in CPI and inflation itself is exactly what the Fed is trying to fight. They're trying to combat that. They're trying to bring inflation to a slowdown, and then eventually even bringing it lower than it is, right? Kind of curbing that inflation. So when we see things like this, right, we see these 40-year record highs getting settled in for CPI, right? You have to kind of take into consideration that when you have that right back to back with interest rates, that you're gonna have crazy momentum, crazy volume coming into the markets, because right now everybody's looking at the Fed like, okay, they have to act, right? They have to increase rates, and we already know they are, right? A lot of us, we kind of discussed this. We know they're going to be increasing rates. We know they have a set schedule for that. We know a few things about this. We know they won't go more than 50 basis points, which is something they've said. And I kind of believe they're getting kind of put into a corner here where those 50 basis point hikes are not really helping them. And they might actually be forced to kind of retract on that statement. Let's see what we have here in the chat real quick, because you guys are dropping some stuff. I personally feel it's 50-50 for a 75 basis point rate hike. Yeah, I mean, we're getting close to that with these record high inflations, right? The Fed is going to have to come to a decision point, basically, where they have to kind of look at their current path and say, okay, well, is our current path helping curb inflation at all? or do we have to get more aggressive, right? We're big on rumors, right? We love rumors. We love things that are coming up, right? We're no longer playing the CPI numbers. This is already a result. The market's already reacted to this, right? We're going to start looking at the rumors, the stuff going on this week, the next 2, 3, 4 weeks, what we think the Fed's going to be doing going forward. I was also thinking how it's been 100 years since the Great Depression. That's also interesting as well, right? A whole century has kind of went by. Could it be the end of the dollar? Well, we'll talk about that as we get to charts, bro. We'll talk about that as we get to charts. But let's jump into the fundamentals for this week, guys. As always, you guys know we always want to kind of start with the fundamentals because, again, we're rumor traders. I'm a rumor trader, right? I don't like to trade the results, right? We'll talk about Friday's result with CPI and how, you could have played that. And, yeah, you could have taken positions right after that number came out. But typically, we like to be ahead of the market, right? So there's a news event coming out on Wednesday, right? We want to start positioning ourselves in those Monday, Tuesday points. If there's news coming out on a Friday, typically we want to position ourselves Wednesday, Thursday, right? We're always kind of playing what the rumor is before things drop, right? So let's kind of take a look at the economic calendar for this week. I'm going to filter this out by just the high impact news. Otherwise, we'll be here all night talking about the lower impact news, which we call soft data, right? All of that soft data does matter. It's usually retail numbers, housing numbers, right? All the little kind of things that build up the overall picture. We could sit here and talk all day about that stuff, but we're going to just look at the major releases for this week. So we have some holidays coming in from Russia, Australia, then Russia again for Sunday, Monday. Not really going to have much of an impact. But starting out on Monday, if you guys are trading the pound, we are going to have GDP year over year, quarter over quarter, month over month for the pound. We're also looking at manufacturing production and, again, more just monthly GDP numbers. So a bunch of GDP numbers coming out for the pound. If you guys are trading pound yen, pound dollar, I know somebody in the chat mentioned pound dollar before, right? You're going to want to be paying attention to this Monday news, the expectations that are coming around GDP. I don't have too many comments on this. To be quite honest with you, I don't think this is going to come out great. No GDP has been necessarily coming out great. I wouldn't expect a big result out of this. The market probably doesn't expect much either, to be quite honest with you. Hello from LA. What's going on, Bitcoin Mommy? Good to see you in the chat. Thank you for hopping in. Let's see what we got on Tuesday. Tuesday, we have more GBP news, guys. Average earning index. The claimant counts change, news events that I'm going to be honest with you guys, I'm not too particular in what this is. I'm not too knowledgeable on what this actually is. Oh, this is their unemployment number. Okay, I probably should have known that. So you have pound unemployment numbers coming out. I'll be honest with you guys, I've never played this in my life. I've never looked into this in my life, but this is their unemployment numbers out of the pound. So again, if you're trading pound pairs this week, which I'm personally not, you're going to be paying attention to this news. We do have PPI coming out of the U.S. This is going to be a big number for the U.S. This is going to be your producer price index. Again, this is mainly the opposite of CPI. This is kind of on the producer standpoint, right? You have CPI, which is your consumer pricing index, right? That's kind of the stuff that affects you and me. This is actually affecting the producers themselves, the makers of your goods, right? What they are paying. Again, just like CPI though, guys, we see the relation between PMI, CPI, and PPI. We know all of these things are going for new highs. So what are we going to expect out of PPI, right? We're not going to expect this to be contracting or falling. We are expecting it to come out either back at its previous results, or which much more likely is it actually comes out higher. So they are forecasting a little bit of a higher increase in PPI, which again is going to be that producer price index, which again, this is going to affect all the production of everything that you buy, right? So if production costs are going up, consumer costs are going to be continuing to go up. A lot of people think that price rises in the stores are, corporate greed. But when it comes down to it, there's a lot of things affecting that. One, the cost of these, raw materials and resources are going up as well, right? The labor costs go up. The gas and diesel prices are affecting all of that production as well. So all of this stuff is going to continue to rise. Again, gonna affect the Fed's decision going forward of what they can do to kind of curb this inflation on the producer and consumer end. So we do have PPI coming out on Tuesday. That'll be 8:30 in the morning. Again, I would expect this to come out higher, contributing further to potential, dollar strength, indices falling, because as their costs to produce go up, they do have to raise prices to combat that, but it does eat into the bottom line. So getting into Wednesday, Wednesdays when we're gonna get really spicy. There's, of course, as we mentioned before, the interest rate. Of course, there's crude oil inventories, there's retail sales, all that fun stuff. But the big thing this day that the entire market's going to be looking at is going to be, one, the interest rate decision, which there's a little bit of, in the rumor mill of what they're going to do. There's almost a 90% chance they're going to raise this by 50 basis points, which means that we will go, 0.5% higher than we currently are. As you see in the chat, some people are potentially expecting them to do what's considered like the shock result. The shock result would be that they go to a 75 basis point hike and kind of give that 0.75% increase. Now, personally, I would love to see them do that and say that, just because I love drama in the markets, right? I love the unexpected result. So I would love to see them kind of do that. It's also my belief with CPI and just inflation in general continuing to rise past 40-point highs that the Fed has to get more aggressive. At some point, they have to realize that, the current path that they are taking isn't enough, right? It's just not getting the job done. I would like to see them do just one real nice interest rate hike, kind of see how the market reacts to that. It's probably going to throw the market into a whirlwind if they were to do that. And excuse the thunder, it is storming out here in South Carolina. We got some, nightly rain and thunder. So if you guys hear that, that's all that is. So we do have that interest rate decision, right? But what I'm going to be focusing on, right, is going to be less the decision, because I already know that, again, they're 90% chance they're going to just follow their current path, right? What I'm looking at is their statement and economic projections. Right? Again, I'm a rumor trader. If you're paying attention real quick, drop rumor in the chat for me, right? I'm a rumor trader. We define rumor as, anything in the future that isn't necessarily out or concrete yet, right? So I get it. If they put it in their statement, their economic projection, that they're going to get more aggressive, you may look at that and be like, oh, that's not a rumor because it came right out of their mouth, right? But the fact they haven't done it yet, for me, remains a rumor. If you guys paid attention to the Fed too, if you actually watch the, boring, statements that they do, if you guys actually watch Jerome Powell kind of get up there and speak, it's not fun. It's on YouTube though. You guys can watch it. They basically spend an hour saying the same thing that it says just in the publicly released statement. But usually what they do is they won't straight out say that they want to get more aggressive. What they'll say is something like, if the inflationary path remains the same, the Fed we may look at doing XYZ, right? They use not concrete terms, right? They like to say, if this, then we might look at doing this. And those are the statements that I love, because what that allows, right? If they say something like that, if they say that inflation continues, then they have to maybe kind of put into a corner where they have to change their plan, right? Then what can we do as traders? Well, we can look at when those CPI numbers come out. We can look at the expectations for that. And if we know those numbers are going to continue to come out higher, and we see those numbers come out higher, then we can start positioning ourselves in the window between CPI and that next decision in anticipation for the announcement that they will get more aggressive. Right, so we like to play those rumors. We like to kind of speculate on what they're going to do. That's how I make most of my fundamental money. I don't wait for them to say it. I play in between the lines, right? The finance guys and the political guys are the same, right? They talk in these kind of like double context, hidden statements, right? They like to play around like that, right? So let's see what we got. We got everybody dropping rumors. I love to see it. I believe Powell has said he wouldn't. Yeah, that's the thing, right? That they wouldn't roll out a 75 basis point hike. They can say that all they want, but at some point, inflation, if the 50 basis points not working, at some point they're gonna get put into a corner where they have to get more aggressive, right? And that's kind of what we're looking at, right? So that would be the rumor. The rumor would be like, all right, cool, maybe they do have to get more aggressive, and everybody's gonna be like, oh no, 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 they said that they wouldn't, they said that they wouldn't, they said that they wouldn't. But again, like a politician, they say one thing, but when they get that actual job, when they get in that actual position, that moment of making the decision, you know, they have to again think logically. They can't just be like, oh well, you know, this is what I said, let me stick to it. No, they're gonna be like, all right, well, that's what I said, but this is what has to get done, right? Or I can't even do that. I'm getting put into a corner where, you know, everybody else that's on this Fed board is saying, hey, like maybe we gotta readjust. Like, yeah, he's the board chairman, but there's other people in there that are making decisions as well. Let's see what else we got in the chat. You have to read the transcripts of their meetings to get the juicy stuff. Yeah, you really do. You gotta dig into the transcripts, guys. If when these statements don't come out, if you're not watching those boring YouTube videos of Powell speaking, if you're not digging into the actual economic projection PDF that they put out on the FOMC website, if you're not digging into that stuff, and listen, maybe that goes way over your head. You're like, you know what? Listen, I'm not an economist. I've never went to college for this. I feel you. Either did I. Right? But you have to jump in and you have to begin reading it, right? You read it for yourself, think of what you think it means, and then go on Bloomberg, right, and read the detailed articles that people that are actually knowledgeable put out. Compare what you thought to what they said. And again, you know, you might find conflicting opinions. You're going to find people on both sides of the fence with their own agendas. You have to sift through all that and you will get to the truth. But if you don't start reading this stuff, if you don't start diving into the details here, right, you're never going to get to the point where you begin to learn it or you begin getting comfortable with it. You have to dive in, right? It's just like the charts and trading, right? Like people all the time, they look at, you know, trading view charts when they first start out and they're like, wow, this is confusing. Reading price action patterns is confusing. I don't know what any of these candles mean. But then you get in it, you start doing it, you get more comfortable, and then you can begin to trade. Treat fundamentals the same way. If you don't get into the details, if you don't get into like the nitty gritty of like what they're using to make these decisions, you're never going to get to that point. So I urge you, if you've never read through the actual like economic projection PDF, if you've never downloaded that in your life, go ahead and do that this time. Right? Read through it, familiarize yourself with the terminology, there are roadmaps, and trust me, over time as you do that, you know, 1 year, 2 years, 3 years, you'll start to see the difference. So let's see what Abel said. They say something too aggressive, it will completely spook the markets, and that's why they, yeah, I mean that too, right? Like they can only be so aggressive. The 75 basis point thing again is something they kind of have to like let the market dictate for itself that it's ready, right? If they just came out at the beginning and they were like, you know what, we're just gonna raise interest rates by 2% and we'll see what happens, the market would have been like a straight line down. Like you would have been hitting the stop limit every day in the stock market, right? So they kind of have to do it gradual. They kind of have to, you know, release a statement where they're like, okay, well, we're taking in more data, right? We'll see what happens next quarter. And then when next quarter comes out bad, now they could say like, okay, cool, we've taken this data. You know, we believe that in the future, if it continues this way, we will have to get more aggressive. They kind of ease you into it. But if you read between the lines early on, you'll see that, okay, we're heading down this path. It's just a matter of them, like Abel said, like they're not trying to spook the market. So they do all this double talk. The institutions, the hedge funds, the big money, they all know what's coming. But to you, you look at it and you're like, okay, well, they're not really sure. I wouldn't be surprised if we see a 100 basis point hike to tame this inflation. Yeah, I mean, I actually read something interesting that said, and again, like this is like before my time in trading, but apparently when inflation used to be really bad too, that the only way the Fed was able to curb it was by raising interest rates near or beyond what the inflation rate is, right? So if inflation is like 8%, right, they're talking about moving the rate to like 6 to 10%, right, to combat that at a fast pace. That's absolutely crazy to me to think about, to see, you know, interest rates go all the way up to, you know, 6, 8, 9, 10%, and if inflation continues, possibly even higher. But, you know, to Michael's point, it would be interesting to see if they do that. Like this video, this real, yeah, I definitely appreciate you guys. If you guys are getting value, drop a like. It does help other people on YouTube that are currently looking for content kind of find this. So if you guys are, again, getting value, I do appreciate the like. If you're not getting any value, then hey, let me know in the chat and we'll switch it up and see if we can answer some questions for you. right? So yeah, big thing coming out on Wednesday. Again, it's not so much about the interest rate decision for me. It's the statement, the economic projections. I'm trying to look inside of that for hints of what they're gonna do going forward, and then I'll start trading off of that. The rest of the week, I don't think we have too much out of the U.S. on Thursday. What do we have here? We have the Swiss franc interest rate decisions. They are actually still setting at negative rates. So they're like the yen, and they're kind of just, not doing much here, putting themselves in just an interesting position. Again, personal choice out of their central bank. Every other central bank, including the euro, which has not done anything in 11 years, right? If you guys were paying attention last week, the euro is now starting to look to raise rates as well, something we discussed. You guys could look back on last week's call about that. So maybe they start to shift their sentiment. Maybe they want to go towards zero. Maybe they want to even increase. But big deal if they start to do that. I don't trade Swiss pairs. I've been trading for 7 years. I haven't traded the Swiss franc pairs in about 6 years. So I'm going to leave this alone. But for those of you that do trade this every day, if you're always looking for setups, pay big attention, because if they make adjustments here, it's going to absolutely move that market. I wouldn't expect anything on the Swiss franc side to hold if there is any strength off of this because of this negative interest rate. If you guys know anything about interest rate differentials, Abel talks about it a lot on his channel, right? Shout out to him for giving you guys that sauce. But basically the country that has the higher interest rate is always going to have the bigger money flowing to them. So with negative rates, they're just, kind of digging themselves in a currency hole there. U.S. dollar, again, building permits, initial jobless claims, not really anything that's going to do big for the market, right? The interest rate decision is going to drive most of that. You may see a little correction on some of this news if it's positive, but I highly doubt that. And then for Friday, the only major thing that we have here is the Bank of Japan press conference. See if the Bank of Japan wants to do something to save the yen. I'll be real with you guys. I don't expect them to do anything. I expect them to just continue on their same path of throwing their currency down the drain. Right? But if they want to say something different, then we will act off that. But we do have CPI coming out of the Eurozone. Again, if you guys were on last Sunday's call, we talked about the euro and their interest rate decision. They did not hike this time. What they talked about, that they will actually begin hiking as soon as the next quarter. So they are looking to do that. If their CPI, again, continues to get worse, just like the United States dollar, we're going to expect them to stay committed to those interest rates. So much for the yen and the Swiss franc being safe havens. Yeah, man, I mean, we've kind of talked about this a lot in private, right? When we started trading the Swiss franc and the Japanese yen, and still to this day probably even, right, it's often referred to as a safe haven currency, right? They're often seen as like the currencies that people kind of go to in times of turmoil, markets collapsing. I'll be real with you, when the S&P and the NASDAQ and the Dow Jones and all that, when they fall, typically the yen gains some strength, right? Just like when gold kind of goes up, the yen usually gains some strength. And you're just not seeing that anymore. It's not the same market that, Abel and I grew up in. When Abel and I grew up in this game, these were the safe haven currencies, and they're just nowhere to be found. And I think a lot of it has to do with this negative interest rate, because you're not, who's going to put their money into a safe haven that it's actually costing them money to be in? Like, you're going to seek out alternative, safe havens. So it's definitely interesting to kind of see that dynamic shift over the years. So if you guys are new to trading, you might not even have any idea what I'm talking about. It's okay, but these have generally been seen as safe havens. So it's kind of funny to us. But yeah, guys, that's what we have on the news. Again, for me, the big day is Wednesday, because I predominantly trading things associated with the dollar or associated with safe haven status, so things like gold, again, typically the yen, but not so much recently. So the Wednesday for me is going to be the big day in terms of rumors. Now let's take a look at the markets, right? We're going to start off like we always do. We're going to start off with the NASDAQ. And as always, we're going to start on the weekly chart, right? It's a brand new week. We want to see what happened last week. We want to see if that's worth exploring in terms of looking at it from a trading range or from a momentum move. If we take a look at last week's candle, we absolutely have a momentum move. And for those of you that are familiar with the way that I trade, you guys know when we have momentum like this in the direction of the trend, right, because we are in a major downtrend, then typically we expect that momentum to continue early week, right? We talk about this. Momentum usually always continues, especially when it's induced on a Friday. All right, 90% of this move, happened on Thursday night into Friday, so expecting momentum to continue. NASDAQ absolutely wilding out. Has completely erased the bullish move that we took advantage of about 3-4 weeks ago. We exited all of our longs in this position, up in this range. So we are no longer long the market. I don't know if anybody's going to ask that, but we obviously not long the market anymore. In the middle of last week, I was like, all right, we kind of just got to cut this, and we kind of hopped out up here. So we're going to explore just, the case for this, maybe continuing the momentum down. I would expect us to pierce some lows. I fully expect NASDAQ to create a new low this week. I'll be real with you guys. If you were here on last Sunday, you know that we kind of broke down, that last week was going to sit in a trading range, right? If you go back and you kind of look at last week's video, we talked about how this was going to sit in a trading range. We're going to monitor the action at the top and the bottom of the range. And how we kind of expected it to come back down at least to 12,200 because we expected this area to get wiped, right? So it's safe to say that that level got wiped, right? It's safe to say that 12,200 got smashed. And I'll be real with you guys, I did not catch this short. Annoyingly enough, if you see on the chart, we were looking for a deeper liquidity grab into the week. I really wanted to go short off 12,800 levels. We never got it. So I, very unfortunately, even though being correct in my analysis and expecting this to break down, wasn't able to catch the move. Now, some people in the inner circle caught their own trades, right? Shout out to yo. I think Michael was in this. I don't know if you caught. I don't know if he caught the entire move. I don't know if he's still in it. Something tells me that I don't think he is. But nonetheless, me personally, I did miss this, right? This is one of the examples of, the analysis generally going correct, but me being so greedy with my entries that we weren't able to capitalize on it, which is really unfortunate too, because I left a lot of money on the table, and probably in the future still a lot of money. Let's see what we got in the chat, right? Brother O from Philly in the house, what's going on, bro? Yeah, yeah, Julian, this thing got smashed, bro, right? Absolutely smashed. Nah, exited, I should have held that. Yeah, you live and you learn, right? I mean, this is why, again, bro, this is why we teach, right? You always leave 20% of your trade running no matter what, because you never know how far your trade will run, right? So that being said, family, right, what do I expect this week out of the NASDAQ? Because of the nature of the market right now with this intense selling, I'm going to be real with you guys, I'm probably not doing anything until after Wednesday, because the only path I see for NASDAQ, S&P, US 30, and everything is just to continue this intense sell-off into Wednesday. Will there be small intraday pullbacks? Yes. Will I be entertaining those? Probably not. The risk to reward down here, the risk of failure down here is just too high. There's a lot of inefficiency. Price can get away from you really quick. I'm just not looking to take a bunch of little small losses when there's no trading range, right? It just doesn't fit my dynamic of trading, right? But I will tell you guys on the weekly time frame, right, that I would expect it to come down and test below or at this level. This is a whole another 700 800 pips points down at the 10,900 area. I would expect us to kind of liquidate this move kind of over here into this zone. That's my expectation. And then after Wednesday, right, I'm going to start looking for reasons to potentially trade against the trend pending what the Fed says. If the Fed does not commit to getting more aggressive, I'm going to look just for little relief bounces, to come fill some of this inefficiency. But for me, I think that this week continues down into here, and then we maybe close the week kind of back up, where we are. So leaving a little bit of a wick here this week, that's kind of what my expectation is. again, I'm not going to trade into this downside momentum, right? If I don't have an entry up in the top of the range, I know it's greedy. I know it's greedy. Trust me, I do. I know, but the trade for me just isn't clear. I'd rather wait for clear signs. I'd rather wait for some sort of liquidity to get grabbed. I'd rather wait until I see what the Fed has to say before I make any big judgments. But if you guys are in this trade, if you are riding this down, that's going to be great. I'm going to look at some of the lower 4 hour just to see if I can give you guys any potential like little pullback areas to play. But a lot of this is so smooth that I'm just personally not going to find anything to kind of play. So this is the open area, right? This is the gap. I know people are going to be looking at this gap to fill. A lot of people are going to be looking at this gap to fill. I would be interested in shorting right kind of above the weekly open price if we do get up there, right? The one and only setup that I would probably take on this if I was trading, and again, me personally, I'm not trading. I'm just on here analyzing for you guys, giving you guys value. I'm personally not putting my accounts at risk this week, but I would look for up into this kind of supply. I would look to short, right up to here. Again, looking for that weekly continuation, but I'm out if it liquidates any sort of price action up here, right? So I'd be really low risk, maybe about 11,900 or right around the weekly open. Come test up some of this supply in this area, and then I would be out. Because if you break this level, then you're going to come and fill some of this inefficiency, and I'm just not going to play with that. So that'd be like the only thing that I would say if you guys close this gap and play up into some of this supply early week, that'd be like your one setup. But realistically, this thing's going to just sit down here all morning, maybe fill the gap during pre-market, and then they're just going to kind of take it right back down. Right? That would be my expectation. So I'm not looking for anything too crazy here with the Fed interest rates coming out. We know this is deemed to continue that sell side momentum. And then after that result, right? After that result comes in, if they don't say they're going to get more aggressive, I'll start looking for fades because the mass market, right? All the retail traders are going to be playing into that result, right? When those interest rates come out, it's going to, again, I think it's going to look something like this where we spike down on the interest rate. We sit there for a while, Powell starts to speak, it spikes down, and then as Powell speaks, we kind of erase the move, and everybody's kind of left thinking like, oh, well, this is, bearish for the market, why is it going up? Well, why is it going up is because the institutions have been selling this ever since before CPI, right? The entire move that you're seeing, like this is not, smart money is not continuing to sell down here. Smart money was collecting all of their sell orders, exiting the market up here, right? And then once they fully were able to distribute out their supply, yeah, then you fell, right? But smart money typically not trading down here. They're not taking large positions down here. They're going to just continue riding out their stuff. No big buy orders in the market. And then once you guys have your signal to kind of go short, and when I say you guys, I'm just talking about the general investor, the general trader. I don't specifically mean anybody on the call. But right, when everybody begins to sell into that interest rate news, that's when you kind of start to look for those low risk opportunities to fade the market and catch a bounce. So that's what I'm looking at here. Now it's opened with no wick, maybe your retracement up then down. Yeah, it's exactly the same idea, right? The NASDAQ opened and it opened very strong to the downside, no retest to the upside. So yeah, that's what I'm looking at. Unless it retests the open here, I'm probably not touching this. All right, let's take a look at gold. So gold is actually super interesting. It's kind of I was actually looking at this at the open, and I was actually thinking, I was like, this is actually kind of a very classic, like, I don't even have volume on my chart. Why is volume hidden? All right, kind of a very classic move. I've seen a lot of buying volume come in here, and a lot of this was on the back of CPI, but more so the China-Taiwan statements. If you guys are unfamiliar, last week China basically said. They'll go to war over Taiwan, right? They want Taiwan. They want that territory back. They want to claim that. Right? I don't have any opinion on whether they should or shouldn't. There's really none of my business. I don't have a say in that. But China said they will do whatever it takes, right? They basically said they are willing to go to war over this. If the U.S. has a problem with it, they will go to war with us over it. The U.S. generally does have a problem with this. Us losing Taiwan would not be overall great for the market. So the market did react off of those statements, right? Gold did claim that safe haven status that it is. And it kind of came up and it grabbed this liquidity. Now, we talk all the time, right, about volume levels. We talk a lot about volume. The strategy that I teach, supply and demand trading, has a lot to do with what we call effort, right? The law of effort, right? How much effort is actually being put behind a move. And when we take a look at this, yeah, this is a big, scary candle, right? A lot of momentum. People probably looking at this and saying, man, that's, that's very bullish. Some people probably even try to buy some low time frame, break and retest type stuff. But what you're seeing now, right? One, let's talk about the effort here, right? One, let's talk about the effort behind the move, right? When you guys see a lot of buy volume like this, and you come up and you break a level, and it doesn't hold, and you just keep getting rejection, and then eventually you start getting moves like this, the buyers here are completely exhausted, right? This is, again, a case of absorption, right? We typically talk about absorption in the sense to the buy side, but this is absorption to the sell side, right? You have the market pushing up, the market is absorbing all of those buys, not allowing price to move any higher, right? Even though they're trying as hard as they can, right? This is the most buying activity that we've seen in an entire month, right? The most buying activity we've seen in a month, and it couldn't hold the break of structure. So for us, right, we look at this and we call this a potential upthrust after distribution, right? So if you're a Wyckoff trader, if you have my supply and demand course, right, if you're in the course, the inner circle, whatever you may be in, if you're just searching Wyckoff content on YouTube, right, we call this an upthrust after distribution, right? A big effort from the buyers to bring price higher, which they are not able to sustain, not able to follow through. The momentum doesn't continue, however you want to phrase it, right? They were stopped in their tracks. Now, again, this move was fundamentally driven, right? China did come out, say what they said, CPI came out. Again, typically not great. But what you have here now is, again, them playing the rumor of Wednesday, right? They're playing the rumor of the interest rates, right? So what you have is the market kind of course correcting. And we talked about this in the inner circle, right? There's a lot of inefficiency, a lot of imbalance, right? A lot of this smart money traders, you're going to take a look at that. I know a lot of people are also looking at this order block here, all right, as a potential buy. But in my opinion, I think, and again, this is just my opinion, but I actually think we return lower than these lows, right? Pending China coming out and saying anything more about Taiwan, pending another war starting. Those things aside, we can't really foresee that. If we start to see China making some military moves, we'll throw this idea right out the window. But until they start making actual military moves against Taiwan, I'm gonna play that basically all this was smart money capturing liquidity on high effort, and now we're gonna come down, grab some of these lows, because I am very much bullish the dollar. I'm very much bearish gold. I've been bearish gold since we retested 2K, and we're targeting levels of 1760 on the weekly time frame. I'm still bearish gold for the liquidity wipe of 1670, right? So for me, I'm actually looking at this like, hey, this might actually be flashing some signals to me to begin to, get back into my bearish bias here. So for me, early week, I'm really hoping that gold gives me some sort of a pullback. I would love to see gold, by tomorrow morning, maybe even Tuesday morning, kind of pull back up into this supply. Now, for me, again, a lot of people are going to look at this and you're going to, maybe put your resistance areas. Maybe you're going to want to, do a retest of the bottom range. For me, in terms of point of interest areas, because there is no clear, order block structure, there's really no clear, some people would consider this maybe an OB structure. That's not something that I would normally want to consider an OB structure. Maybe that looks better on the 30 minutes, right? But to me, there's really no clear OB area. So I'm going to just play, right, the little 15-minute liquidity pocket here, right? I'm going to just use this zone here as my area of interest zone. And all I'm looking for on gold, right, it's not going to take much for me to enter on this, is a low volume pullback to the upside, right? So if we get this, again, it might be, you know, whatever the structure is, maybe we could draw this 1,000 different ways. We want to see this come up, and we want to see it have lower volume than the last times that we came up, which if I can get the price off the volume bars here, right, I just want to see lower volume than what we have basically all throughout here, which is, to be quite honest with you, not much. But if we get volume levels that are, you know, below this, as we make that move up, I'm going to be looking for my shorts on this. So for those of you guys that are in the inner circle, for those of you guys that are in the course that have the entry techniques that we look for on lower time frames, you guys know what we're going to look for up in that area. We'll look to execute off 1874. I'm probably going to throw this idea out the window if we break above 1883. So for us, our max risk would be to 1883. Again, you guys know that we take our actual stop losses based off current price action. So when the market is actually up there, we'll find tighter stop losses. But we're going to be looking at shorts around 1875, which stops 1882. And again, we're playing higher time frames on here. So again, we're gonna be greedy. We're gonna look for like that 1817, those 1815 retests. I would love to see us come down and fill this wick, but for me, once we fill this wick here on the 4 hour, or even kind of come into the order block, I'm gonna start booking profits. Right, I'll take 30% of my position here. You guys know money management is everything for me. Even though I have targets of 1,000 pips, 2,000 pips, whatever it might be, I will book profits at like 1844. We take some of our position off the table, we pay ourselves, and then we hold to see if we get more. So kind of just keep that in mind. But that's what I'm looking for on gold. I think this is a beautiful setup. I think with the interest rates this week, this is going to be probably the cleanest setup that we have this week. Again, I'm not really looking at the NASDAQ. So that's what I want. Just bringing up a point, fundamentally with inflation, doesn't it make more sense for gold to be long-term bull? So that's actually a good question. It's actually a really good question. You would think that, right? Gold, in my experience, right? And again, this is just my experience over the years. Gold acts better as a safe haven in terms of trouble. Right, so you can expect it to kind of go up, and inflation might be one of those things that you would like look at, like, okay, yeah, there's inflation, but gold is also, again, paired to the dollar, right? So if the dollar is ultimately gaining strength, right, you typically also get a weaker gold in comparison, because as the interest rates rise, more people want to hold actual cash, right, to, you know, again, into that dollar strength, because they're playing those interest rates. So I can see why you would think that, because again, inflation, typically a bad thing, but because again you're paired against the dollar, and the dollar is more appealing to hold, you do get sell side on the dollar as well. I mean, we can look at that. It's abundantly clear on the chart, right? Because if inflation was truly having an impact on this, don't you think that we would have cleared 2,000? Don't you think that all these weeks of inflation numbers, right, you wouldn't have had a bearish gold, right? Inflation is not impacting gold in that way. Yes, when CPI comes out, you'll get spikes in gold that push it up, but ultimately those interest rates are what's driving that dollar strength, and it's actually what's bringing it right back down. And again, you're seeing that now. Right, you see the spike up that it had through CPI because it's gaining safe haven. You see the China headlines, it's gaining that safe haven. But now you're in the week of interest rates, and the market's looking at this like, okay, well, this is not as appealing as the dollar is going to be with another interest rate hike. So you have to, it's a double-edged sword, right? You can play both assumptions, but you have to know the type of market environment that you're in. Now, if we were seeing this stuff and the Fed wasn't increasing interest rates, then yeah, you would probably see more of a reaction from gold. It would actually act as a safe haven because the Fed's not fighting against that. It's not trying to pull things away from that, right? People that are in gold still have to, you know, liquidate their gold to combat inflation, right? Like, say I had all my savings in gold and inflation's kicking my ass. I can't afford gas. I can't afford groceries. I have to sell that gold back for dollars, right, to combat the personal inflation in my life, right? Just like if I had all my money in Bitcoin and then, you know, Bitcoin's taking a fall because of interest rates, inflation's kicking my ass. I got to sell my Bitcoin back to dollars. It's the same idea. So you would, again, the assumption is good. You're not wrong, but in a market where the Fed is being consistently raising hikes and possibly getting more aggressive with it, you're gonna see that weakness come in gold. But yeah, no, that was a real good question. It was a real good question. It can be very tricky for people. Would I be willing to look at the gold 3-month chart? I could try. I'm not paying for TradingView right now, so I don't think it's gonna let me. Is the 3-month one of the free ones? Yeah. I mean, we could look at the monthly though. Hold on. Let me just go to a different gold chart. Look at that terrible idea. So I mean, we could look at the monthly. I mean, the 3-month would be. Depends on when the 3-month opens and closes. I don't know when it opens and closes, but we would assume it would be these 3 candles if it includes this month. But again, look at the monthly structure. I mean, there's nothing in here that says this is being used as a hedge against inflation, right? There's nothing. Now, when they started printing the money and everything like that, yeah, it pushes up. The war in Russia, yeah, absolutely. In times of war, gold flies. Right, the whole Russian situation sent it higher, but there's just nothing in here that check your UJ. You want me to check that on stream? I could check it on stream. If you want me to criticize it in front of everybody, I have no problem doing that. We'll do that when we get to UJ though, Jude. I got you. Yeah. So on gold again, I'm remaining bearish bias on gold. We could actually see a new 4-hour candle just recently opened too, and we're already actually. That's cap. That's cap, because this is the actual chart that matches your broker. Gold on the monthly looks like a cup and handle. I'm gonna be real with you. There's no. I'm gonna be real with you. You'll never ever hear me say cup and handle. That's not a chart pattern that I use. We use supply and demand, right? Let me show you on gold real quick why we've been bearish gold. Hold on, let me pull this up just so people don't think I'm capping, because we've been looking at this for a while. I'll show you guys my long-term. Hold on, I got you guys right now. Let me get one of my old charts here, so I don't have to redo this myself. Whoops, that's not what I want. Alright, so look, this is Discord. Can y'all see this? Can I make this any bigger? Open original? Oh no, what is that? Okay. All right. So let's take a look. Right, this is my old weekly chart. Right, this is why I built my whole bias on bearish gold and why I thought the top was in, at least for now. Right, so this is old. You can see this is back in 1918. We were calling this. This is all old stuff. But if you're asking about, again, cup and handles and long-term targets, right? So we look at this, right? This is the all-time high, right? So first off, we didn't break the all-time high. 2, right? We have high geopolitical volume, right? So we have high geopolitical volume. This is when the whole Russia-Ukraine war was taking headlines, right? This is when all of this was kind of in play, right? So high geopolitical volume that couldn't push us higher, right? It couldn't push us higher. So we talk about what we just saw on gold, right? The same idea where you get these high volume spikes, but you don't get a break of structure, right? Same reason why we're looking to the downside. We did expect little redistributions, right? Premium pricing before, full Fed rates. So again, at this point, we're already pricing, and again, playing the rumor of the future Fed rates, right? So we're expecting redistribution, right? Again, looking for a weekly liquidity to be taken. Very easy, basic concepts. There's not a ton of analysis on this chart, right? There's just, again, very, very efficient law of effort stuff happening here, right? Again, high geopolitical volume, no break, Fed rates coming in, right? Return back to normal, right? We completely erased at this point all of the high geopolitical volume. So when you're looking at this stuff and you're saying like, oh, cup and handles and stuff like that, those are just chart patterns, right? You can find chart patterns everywhere. You can find ones that work, you can find ones that fail, right? But supply and demand does not lie. I'm just be real with you. Supply and demand dictates everything. It dictates the prices in stores, it dictates things on the chart. There's nothing more effective, in my opinion, for pricing anything, anywhere, in virtual games, in stores, in markets, than supply and demand. And what we have here is a shit ton of demand that couldn't overtake supply. So this is why we're looking to the downside, right? The plan doesn't change, right? We don't change unless data suggests that we change. So yeah, that's some of the longer term stuff. Again, you can see a lot of the analysis of what we were looking for, kind of just breaking it down. But again, let's stick to some of the stuff that's actually happening now. Let's see what we got. Just got done a summer bowling tour, late but present. Oh, you good, Bert? You good? Always appreciate you, bro. So yeah, I'm gonna continue looking bearish on gold. I do not think we will clear these highs. If we do clear these highs, that's fine. I eat my loss. I own my loss. It's cool. The market can humble me. The market can prove me wrong. But until it does, I will see you guys at lower 1800s, either later this week or later next week, right? We might be on this same call next Sunday talking about, it's still making that move. All right. Any questions on gold, right? Does this make sense? Are you guys understanding this? Does it make sense to you guys? Do I need to break it down on a more basic level? Right, let me know in the chats what you guys think so far. All right, you guys tell me. You tell me. All right, speak up or forever hold your peace. But yeah, that's my setup on gold, guys. That is my setup on gold. We're looking at, what's that again? 1875-ish. You with me, bro? Yes, it makes dollars. It will make dollars. It will make dollars. Absolutely will make dollars. All right, what do you guys want to look at next? All right, you guys tell me. What do you guys want to look at next? You guys got the whole watch list on the side. We'll look at anything on the watch list. If you have something off the watch list, you guys tell me. Where we going next? Yes, and can we see your chart's color scheme for visibility? You want my color scheme? I'm gonna be real with you. I'm a little protective of my chart layout. Some of my students have copied my chart layout, and it's cool. It's cool. Y'all want to be like your mentor. It's cool. But it's just I'm a little protective. You can get close. You can go. I mean, they're it's light blue, it's white. These are my brand colors. These are all the official Skag Academy colors. So these are the same stuff I use on my website, my everywhere. So I'm a little protective. ETH currently in the 1300s. Is she really? Oh my god. Oh my god. She is in the 1300s. Yeah. So we can go over cryptos. Did everybody want crypto? Somebody wants GBPUSD. Okay, hold on. Before we jump into crypto, let's stick to the currencies real quick. So let's give you guys an update on GBPUSD last week. Again, we talked about last week. I told you guys most things were gonna range last week. We seen that early on. We had all the signs for knowing it was gonna range. Here's another pair that I got greedy on, right? It's another pair I got greedy on. I was talking to you guys when it was over here. I was like, hey, listen, I would love to see it come take some of this liquidity for me to trade. We talked about how EURUSD did that, and maybe that like GBPUSD might get its little time to shine. We never got that. Again, I'm not trading currencies, so specifically, I wasn't really upset about missing this because I wasn't going to trade it anyway, even if it did spike up. But again, we talked about how it was going to sit in that range and how it was absolutely going to come fill this wick and continue its move to the downside. Again, the same move you're seeing on GBPUSD is exactly what you're seeing on the NASDAQ. It's exactly what we're going to talk about in cryptos in a moment. These are all the same moves. And for a lot of you guys, you have to understand when you guys ask me to do multiple pairs and like we talk about GBPUSD and then you ask me to look at EURUSD, you gotta put two and two together, guys. Like if we're expecting dollar strength, right? What do we expect all these pairs to do? Right? If it starts, if it ends in the dollar, right? What do we expect it to do, right? Well, all these pairs, we're gonna expect them to fall, right? They're all gonna be the same. Now that being said, if you want again to trade inside of this, right, and trade inside of a trending market, which is not what I do. I analyze trading ranges, I get in towards the end of the range, and I ride the momentum move. If you want to trade inside the momentum move, you should look for something similar on the NASDAQ. You're going to want to try to get the best risk to reward possible on the lower time frame charts. Now again, I'm going to be real with you guys. There's just no clear-cut candle on this, move down that I would want to play. There's no clear supply level here that I want to play. Yeah, I know my order block people are going to go, oh, well, what about this level? Okay, that's cool, but that level is 170 pips away. My question to you is, do you think that pound news is going to be good enough to bring GBPUSD up 170 pips? Remember, they have GDP tomorrow, right? If that's not your belief, if you're not expecting GDP to come out better for the pound, you're probably not going to get this move, right? So if I were you guys, I would wait to see if it erases some of this liquidity here, and just monitor what it does on lower time frames, right? I want you guys to kind of monitor the volume on that pullback, and if you get those low volume pullbacks and you get those lower time frame, live OBs and stuff that's taught in the course, then you guys can continue selling this. But if I were you all, I wouldn't even trade this. This is not something that I would look at. This has already made its move. The only reason we're looking at gold for a potential entry is because gold is just now beginning its down moves, right? It's got potentially, if it does pull back for us, because we might have already missed this, to be quite honest with you, but if it does pull back for us, we can play better logic areas, right? The risk to reward is better up here. We're not trading into a bunch of inefficiency. Yeah, there's probably liquidity above here that can be grabbed. That's always going to be a risk. There's always liquidity above somewhere. There's liquidity everywhere in the markets, right? We know that. But I'm not going to chase these currency pairs, right, when they've already made substantial down moves, right? Until this forms some sort of a trading range and builds up liquidity and then gives me a reason to enter with a rejection, I'm not looking to trade this stuff. So if I were you and I was looking at GBPUSD and you're not already in it, I would sit back, right? Say this is not the pair to be trading this week. Right, that's just me. And if you guys can't do that, right here, little tip, little rant real quick. Right, I want everybody to put in the chat, right? I want you guys to put in the chat real quick if you've ever passed on a trade simply because you just knew that. I'm trying to think of the right way to phrase this. Usually I ask this question like, have you ever passed on a trade if it was ever outside of your risk parameters? Right, I'm gonna ask it the same way, right? Because this is a high risk. Selling into a momentum move like this is high risk, right? So how many of you look at a trade like this and really say like, yeah, this is the market environment I want to be in, right? Or to the opposite of that, how many of you look at this and say like, hey, how often do you just look at something and say, hey, you know what? I missed this trade. I'm gonna just let it go, right? Because if you don't have the discipline to just be like, I've already missed this move. This is not for me. Then I'm gonna be real with you, and there's no hard feelings, right? If you don't say that at least once a day when you're trading, then you're probably gambling. I'm gonna just be real with you, right? If once a day you're not just like, hey, you know what? I missed this setup. It's okay. I'm not gonna chase it. Like it's good. Like I'm not gonna like if that's not you, at least once a day, at least once a week, I would say you're probably gambling more than you're trading. Because at some point you have to be like, this is just not the trade for me. Like it's just I'm already gone. The market's already made its move. There's no clear area for me to play off of. That's it. I'm done. Right? You have to be saying that honestly, truthfully. If you're only saying that once a day, that's being very, very on the low end of the spectrum, right? Like I might analyze like 8 or 9 things, and I'm throwing away like 8 or 9 of those ideas. Like, I might take one of those. I'm going to take the best one. Like, we're going to look at like 6-7 things tonight. And 90% of it, I'm going to say, I wasn't there last week when it mattered. Right? I didn't execute when it mattered. Right? I'm about to be out of this. Right? So I'm going to just be real with y'all. If that's you, and every time you look at the charts, you're able to find a setup, every time you're like, oh man, nah, we got a 4-hour wick forming here. Oh nah, we got 3 bullish candles. Oh man, I'm gonna take this for a buy, man. He said it's gonna come up here. I gotta take that. Like, nah, if that's you, I'm telling you right now, you are in the wrong profession. You might as well go to Vegas. Just go to Vegas, sit at that little roulette table, and play red or black. Because that's what you're doing when you just push and buy or sell off every idea that you get. So I'm gonna just be real with y'all. Let's see what we got here real quick. Let's just go through the chat. I did let it go. Yeah, I mean, a few of you guys know, right? Like, I mean, I don't, not to shout, Alex out there or anything, but like, Alex asked me like straight up. He's like, yo, because I'll be real with you guys, right? We were buying Ethereum. Right, we were buying Ethereum in this range, and that's because I wanted to see a little bit of a bounce before CPI, and then I wanted to short it into CPI, but it just never gave us that bounce. So we exited our shorts at like 17.15. Thank God, because this thing would have sliced through any stop loss that we had. Right, we saw the market for what it was. I was like, all right, you know what? If it goes 17.15, we out of here. Right, and he was like, yo, listen, like, why didn't we just go short, or like, why didn't we go short after it broke the low? It's because like, the idea was already gone. And granted, yeah, like, I get it. You could just go short on like any of these candles, and technically you probably will come out in profit. But how disciplined are you to be chasing moves like that? Because it only takes one time to be wrong, for that one time to be wrong and to not manage it correctly, and your entire account is gone. So one little slip up, and you could really be out. All right, so I'm gonna just be real. Some of you, you like to chase stuff. And if your strategy calls for it, be my guest. If you see it break the support, you're gonna hop right in. That's cool. I'm not saying you can't make money that way. I'm just telling you the mindset you have to have, right, to be that type of trader. No one going to talk about Bitcoin 5K crash. Listen, we gonna get there, bro. We gonna get there. Let's go back real quick. Maybe throw in GJ. You want to take a look at GJ? Let's take a look at GJ. So these actually did pull back a little bit, huh? They finally did a little bit of an actual pullback, surprisingly enough. We grabbed this liquidity on GJ, huh? Yeah, so last week, guys, we talked about GJ when it was over here, and we kind of talked about how if it came down and grabbed this liquidity that I would take it for a buy. Never happened. In fact, it actually never pushed a single pip lower than that call, and it kind of just took off. Again, fundamentally driven. We know the yen is at negative interest rates, and when you have negative interest rates against a currency that has positive rates and is looking or currently doing rate hikes, you're going to have, these kind of crazy moves. We were long from down here. I'm mad I let go of those longs. At this point, right, when I see a spillover like this, we start to get some volume in. I'm going to be real with you guys. This is much like the NASDAQ last week, where at this point, I'm just going to expect this to cycle out a little bit longer. And I'm going to expect this to just play the range, right? So range traders can take advantage of a potential like phase B range market kind of coming into this. I would expect this to only really do this up until like Wednesday. So, don't take an account for how far I drew this out. But I do expect this to not actually do much this week. I think range traders will have great opportunities. Tonight, this probably does, pump up and then down on GDP news. And then from there, you could probably start taking scalp buys. I probably wouldn't be selling this for any reason. I wouldn't be taking sells. I'd be looking for just good buy opportunities. I don't see anything down here I would specifically want to play to the buy side yet. You're probably going to want to wait for some of that GDP news to come out and give us like a clear, potential like wipe of this and maybe a return back above. That's kind of what I would look for on GJ. But honestly, guys, this looks a lot like it's going to enter a phase B. Now, make no mistake, this is probably just going to sit here, reaccumulate, and continue to the upside. Remember, you have the Bank of Japan decisions on Friday, right? You have Bank of Japan policy statements, policy meetings on Friday. So you're probably going to be range bound up until Friday. And then again, we don't expect the Bank of Japan to do anything. And at that point, we probably expect these to kind of break the high. So Friday, I think, is the day that this will actually continue above 169. Yeah, because I'm not, I wouldn't short into that at all. EuroCAD, please. We could take a look at EuroCAD. Let's jump into the cryptos, though. Let's take a look at Bitcoin real quick. Let's take a look at Bitcoin, because Bitcoin is doing pretty much everything that we could ever expect it to be doing. So a couple of weeks ago, we talked about this. I don't think we talked about it last week. I don't believe we talked about it last week. But we talked about, right, for a while, when it was like back in this area, how we kind of expected it to kind of push up into some of these zones. If I actually knock this down, the analysis is probably still on the chart, to be real with you. Right, we kind of expected it to come up into some of these zones here to sell back off. And we talked about how it was going to come down and fill this wick. We're basically now at this point where we are coming down, filling this wick. The big question on this is going to be what happens after we fill the wick. I'm going to be real with you guys. I love to take entries after these wicks get filled. They're typically really quick trades, right? Typically, I'm not in this for a long time. But if we do liquidate this wick and then kind of come back up into the range, I will look for like shorter term buying opportunities. But to be quite honest, again, the way that gold looks, the way that the indices look, the Fed interest rate decision, we know that we're expecting a what? A bullish dollar, right? We're expecting a bullish dollar. So I still, again, think that this is going to continue alongside things like gold. We're going to kind of continue to trading to the downside. Now, we have to look out below, because if we do break this out, I'm going to go to a different chart real quick, because there's just a ton of analysis that we use for the students there. All right, we do have to look out below, because at this point here, there's really nothing stopping us from sinking down to like these lower 20K, 18K areas. This is getting near what you call like flash crash territory, where, you know, a break below this wick, especially with the interest rate coming, that this thing can sink $2,000-$3,000 like that, right? Real quick, flash down, probably gets bought up by, you know, a bunch of buy orders and whatnot. People just discount buying. We maybe see some sort of relief bounce. Ugh. My mouth is so dry, it's unbelievable. It's also so hot in here, it's unbelievable. I got the sweatshirt on, I know. You guys are probably looking at me like I'm crazy. Alright, so for Bitcoin, guys, personally, I think what we do is we spike 22, 23K this week into the interest rate decision, and then after the interest rate decision, we kind of like fade back off, and again, just like NASDAQ, right, we kind of come back and close the week a little higher. I'm actually curious real quick. I want to just go back over to this 20K area. I want to just see what this looks like on a daily time frame. The 22K. I don't want to delete that arrow. Yeah, I'd be looking at like this little reaccumulation at like 22K. Nope, that's back when I first bought Bitcoin. Yeah, I would look, this is probably going to sink into like 22, 23K. And you can kind of already see this weekly candle is just about to absolutely sink against this daily. So my path on Bitcoin, to be honest with you guys, looks like you know, this, and then we will get a slow and steady rise back up. So for those of you that are trading this, those of you that are buying it, I would be very careful if you're trying to play in this area. There's rumors it's going to hit as low as 8K. My stream is lagging. Yo, let me get 333s in the chat if you guys can still hear and see me smoothly. 333s in the chat if you can still hear me and see me smoothly. Can you take sells now? Absolutely not, based off the way that I trade. Could you? Maybe, but would I? No. Ask yourself, what are you doing selling down here? Right? What are you doing selling down here? Right? What's the logic that you're taking? Right? What's your risk to reward? Where are you gonna put your stop loss? Right? What are you trading on here? Right? Unless your idea is to go short here with your stop right above this structure, like, I don't know where else you're managing your risk. Right? This is not where I want to enter. All right, cool. Listen, family, I get my new computer comes in tomorrow, so all these little technical issues that I'm having with mine, where it can't handle the me streaming and watching my stream at the same time, this all goes away tomorrow. I dropped a healthy amount of money on a new setup, new monitors, new everything to kind of bring you guys like even more top tier content in higher definition as well. This is the last time we'll be streaming in 720. I got you guys in 1440 as of tomorrow and beyond, right? We're going to get rid of all this low quality nonsense that we're currently dealing with on my MacBook here. All right, so I don't know what you're selling into, to be quite honestly, bro. Like, you're just chasing the market. Again, we just talked about this, right? You're being emotional. You're already seeing the sell. You're seeing the potential to go down 22, and you're just emotional, right? But any little bit about buying activity, any little bit of profit taking is going to just liquidate you out. That's not the type of trading I do. Bitcoin hits 8K, and I'll go broke buying it up all for sure. But yeah, let's talk about that real quick, right? Let's talk about the macro of this, right? Because a lot of people are looking at, and I know your favorite YouTuber, your favorite mentor, your favorite guy on Instagram. I already know, right? Everybody in the world at this point is saying, oh, Bitcoin's going to go to 22 or 18K. That's neat. We're already at 25. Your little bullshit projection, and I'm sorry for my language and the way I'm going to, kind of attack these people, but your little projection of 22K, we're at 25K, is like the most useless projection in the entire world, right? Like, nobody cares about you making that prediction. But what I will bring to you guys' attention is this is the first time in Bitcoin and crypto's entire inception, right? Since Bitcoin was created, that it's really truly experiencing a bear market. And I don't mean a bear market for it. I mean a bear market for everything, right? Bitcoin was born out of the ashes of the 2008, economic disaster, whatever you want to call it, right? The 2008 disaster. It was born from the ashes of that. And to be quite honest with you, ever since 2008, markets have been generally healthy. They've been great. It's been amazing. The NASDAQ, the Dow, the SPX, they've all been amazing over that, what's now 10, 12, 13-year period, right? It's never truly experienced a market that it's about to enter and go into. So I'll be real with you guys. Even me, you see my long-term analysis, right? You see me looking at like 24K, 22K, and expecting like a longer-term reaccumulation, right? This is not even the accurate roadmap that I had. A lot of my roadmaps had it kind of sitting down here for a long time. So this is the first time, right? So again, I'm with you guys. I like the 18K level. I like the 20K level. But because this is the first time this is really experiencing a macro bear market across all sorts of markets, across all sorts of countries, right? It really can have the potential to go down to 8 to 10K. It really can. As much as, I immediately don't believe it right now. I don't currently see it. But the deeper we move, the more that really becomes a reality. Now listen, if you guys are on episode 2 of this, right? This is episode 4. If you guys are on episode 2, or if you weren't on episode 2, go back to episode 2, right? You can rewatch the whole thing. There's a whole bunch of value in there, right, that we broke down. But if you go to episode 2 and you go to the last maybe 20 minutes, right? Last little rant, right? It'll last like 20 minutes. I talked to you guys about when you will know the perfect time to get back into Bitcoin, to get back into Ethereum. You don't need anything else. You just go back and watch that video. I'm not even gonna break it down, right? If you know what I'm talking about, type BTC in the chat, right? If you were on episode 2 live with me getting that value, type BTC in the chat. I'm curious if there's anybody on here, right? We got 30 people watching right now. I'm curious if there's anybody that was on here. All right. What was it? 2 weeks ago now. Let's see. I'm gonna give you all a moment, because if not, I'm expecting all 30 of you to go back and watch that. Right, that's when you'll know it's the best time to get back into Bitcoin. But I'm gonna be real with you guys. With the current market conditions, this thing absolutely has the potential to go to 10, 15, maybe even 8K. And I'm gonna also be real with you guys. Like Abel said in the chat, if Bitcoin does pierce below 15,000, right? If we really do come below like this 15K level, I'm gonna tell you right now, I'm going back to eating ramen. I ain't driving nowhere. I ain't putting no gas in the car. I ain't talking to nobody. I ain't doing nothing. I'm eating ramen and I'm buying Bitcoin. Right? That's all I'm saying. I'm not advising you to do nothing. In fact, I would prefer you don't, so there's more Bitcoin for me, right? So please don't even buy any, because I'm already taking claim of anything that's available if we break below 15. So, you know, don't even buy it, right? I'm here for it. I'm taking it all up. I'm gonna just be real. Same thing with Ethereum, right? I told a lot of people over the past couple months that, listen, when Ethereum breaks that 700 level, don't be surprised, because I'm gonna be buying it all up. Don't be surprised if you see it go back over 1,000, because I'm gonna be taking all of it. And actually, I recently said even Ethereum to 300. 300 is like, 700 used to be my preferred target. It's been adjusted to 300. Ramen for the next couple. Yeah, I'm telling you, man. I'm eating ramen. I'm going to the whole ramen diet, man. Yeah, listen, I go to Chick-fil-A 5 times a week. That's probably like $80, $90 a week in just Chick-fil-A. Nah, that's all going in. That's all going. I'm buying myself some ETH. I'm telling you. Listen, I'm very bullish crypto. I've taken a big hit. For those of you that know, I'm a hodler since 2016. I've been holding my Bitcoin in a hardware wallet since 2016, 2017, right? So I'm way back over here with it, right? So trust me, it coming down to 8K. Doesn't scare me. It excites me. It makes me beyond happy. So happy. Be a degenerate, take a loan. Listen, bro, by the time we get to 8K Bitcoin, they probably not going to be giving loans out to anybody. They're probably not loaning out to anybody. Interest rates are going to be crazy, bro. I ain't taking out no loans out of your mind. That's why we've been stacking cash. Family. That's why I've been saying, stack that cash. You don't have to take no loan. Alright, so I'm just being real with y'all. This is the first bear market that Bitcoin's ever seen. It's also one of the first times that big institutional money is on both sides of it, right, with ETFs. And, I mean, futures came out back in 2018. But it is one of the times that, you big money on both sides, big money getting involved. So, yeah, it's very easy that it sees 15K levels. Canned sardine with white rice and Doritos. Oh, man. I tell you right now, I'm not coming over to eat at your house. Canned sardine? Nah. I think the ramen cheaper. I mean, adjusted for inflation, the ramen probably like $1.50. These days it's probably no longer 99 cents. That inflation hits. I'll pay that little $1.50 now, but it's all good. You couldn't ask me to eat canned sardine though. I come over for the white rice and Doritos though. But that's about it. All right, so family, listen. Any other pairs? What's up next? I'm giving chat control of the charts tonight, right? You tell me what you want to look at. I'm chugging this water. I'm dying. All right, you guys tell me what you want to look at. And again, family, if you guys are getting value, as always, I do appreciate the likes and subscribes. It does get the content out to more people, helps us get more people educated, helps us get more people right. Again, for Ethereum, it's the same thing as Bitcoin, family. I mean, we've been calling this for so long. It's unbelievable how long we've been calling downside on cryptos for. This arrow that's up here, right? Where this line starts, that's where I drew that line, right? Just so you guys know, that's not, this is analyzed in real time. Man, my mouth's so dry, I feel like I'm gonna get sick. It's crazy. Let's see what we got in the chat here. Alright, let's see. Somebody said the halving, yeah, stay woke. If you know what the halving is, stay woke. The halving will make you more money than anything else. Canned iced teas don't care about inflation. Yeah, so y'all want to talk about that? Listen, do you guys know the story behind the Arizona iced tea company and why they stay at $1? Right? Does anybody know? I'm gonna ask you. I'm gonna give you guys like a minute or two. Right? Does anybody know why Arizona iced teas stay basically inflation proof? Right? Arizona iced tea. Shout out to them. They're a better stable coin than even Luna was, or UST anyway. Right? Right? It was a better stable coin than even Luna's stable coin. It's crazy. It's crazy. Good sauce tonight. Always good to see the boy Ray on the call. Right? Shout out that boy Ray. Fruits in the back, yo. Yeah, facts, right? I got a whole garden in the back. Euro USD, we could take a look at that. But again, bro, we talked about this. It's going to do the same thing GU does, right? EU is already gone. The opportunity is gone. I just need Bitcoin to hit 20K ready so I can cash in on these bets. Hey, listen, Abel, listen. You tried to give me so much shit for not taking that bet, bro. Y'all really did, man. You and little Kyle. Where's Kyle out? Kyle on this? These guys really try to peer pressure me into a bet with Abel about Bitcoin hitting 20K, man. That's why I told you. I was like, nah, I'm not that bullish. That's why I was bullish at a time when we were talking about that over here, because I saw the accumulation, but I knew we weren't going to 75. US 30, yeah, so you guys don't know the story about the... Alright, so listen, Arizona iced teas, they're the company behind them, they're actually owned by a billionaire family, right? So the family behind them, they're already a billionaire in their own right. They own a bunch of different companies. Don't ask me which ones. I honestly I don't know, but I do know it's owned by a billionaire family. You might have even saw this on Instagram and stuff like that, but it's owned by a billionaire family, and basically that family has decided that they will eat all of the cost losses. Right, they don't care. It's always been $1. It will always be $1. It's basically just billionaire stubbornness. Like they just don't want to raise the price, right? So when people say all billionaires are bad, all billionaires price gouge, all billionaires don't care about their consumers, here's a billionaire family that literally has a product that they're losing money on, right? The price for aluminum for the cans goes up. I'm sure the price to make the tea, albeit is probably like fractions of a penny to them. But they are losing money. It's basically a tax write-off for them, right? It's just such a big staple that they just don't care, man. Like I aspire to be that rich, right? I mean, I don't know about y'all, but like it really is one of my goals to be a billionaire. Like that's my path. Like I'm either gonna be like, even if I don't make it, like it's cool. That's my path, right? I want to be worth like at least 10, 15, 20 billion dollars. Right, most of the stuff that I want to do is not on Earth. I want to go do things in space. I want to be up there with Elon. I want to be doing things on Mars. Right, that's like, if I become a billionaire, I'm putting all my money towards like that shit. So, for me, like that's just so inspiring. It's like these billionaires out here just keeping the price of these iced teas for $1, just because they know how much y'all love them. Yes, so they lit. Yeah, they out there doing God's work, right? They out there doing God's work. It's crazy. Similar to Sam's and Costco for hot dogs. Yeah, exactly. Another billionaire fan is just a staple, right? It's what they call a lost leader. For Costco, it's a lost leader, right? It's something to get you in the door. You come in for $1.50 hot dog and drink, and they hoping you buy dog food for your dog, and they make all that money back anyway. Um, but yeah, it's billionaires taking losses, right? They do take losses as well. Hurts when you have to pay that tax. Yeah, shout out to the places that don't charge tax on the Arizonas and just let you give them $1, right? Very few places you can go and give $1 to. They charge $4 for Arizona tea in Australia. All right, so that's some new information, man. Maybe that's how they make their money. They just out there charging these other countries. I didn't even know that. I didn't even know that other countries were paying more. I mean, to be fair, your currency is like, it's a weak against the dollar, so you also gotta account for that. But yeah, all right. Let's see what some of these pairs people wanted to look at. We're not looking at. I mean, I'll look at Euro USD, but again, guys, we already have our bias on the dollar. We already expect what we know the dollar is gonna do. Again, let's take a look at this. We talked about this last week, where it had this spike, right, which was off the interest rates for the euro. If you're just hopping on the stream, if you weren't active last week, if you're just not familiar with the news that came out from the euro, they basically said that they are going to commit starting next quarter to raising their interest rates. I believe they said they were doing like a 25 basis point hike. Don't quote me on that. Maybe it's 50. I'm like 90% sure they said it was a 25 basis point hike. And yeah, often that's seen as bullish for the euro, right? The euro is trying to increase its rates, it's trying to make its currency more appealing versus other currencies. The downside to this is that the US has a higher than 0.25% interest rate. So although that news was bullish for the euro, it ultimately just induced selling because people know that the dollar is one at a higher interest rate, and that this week we're expected to hike even more, right? So as the Eurozone is saying we're going to hike next time, the US dollar is like, well, that's cute. We've been hiking twice already, and we're going to hike again next week. And what you got was just a perfect little liquidity grab to come back to the downside. Now, to be real here, EU is trading off of some demand, right? Is trading off of some demand. I would expect this level to get wiped this week. So following the same plan here, I would actually look for like this candle as like a potential buy opportunity. Again, I'm not playing these ideas pre-Fed. I'm not playing them pre-Fed. I'm playing them post-Fed, which means that I do expect this to continue its momentum drip to the downside, right, into Wednesday. Wednesday pushing us down, grabbing some liquidity, and then Powell is going to do his little thing, and maybe we come up and fill some of this inefficiency here. And I meant to draw a different arrow there, but it is what it is. You guys get the point. So I would look, I mean, personally, I'm going to be looking at the 104 like 30, the 104 at 5 level, just for that sell-side liquidity grab into the interest rates for all the reasons we've mentioned on stream. And then after that, we'll maybe get a little bit of a pullback. Y'all popping off in the chat. Let's see here. Listen, I'll ship them to you for $2, then you sell them for $3.50. We both able out here trying to make a deal on the Arizona iced teas. Listen, I'm gonna tell you right now, bro. You better factor in the cost of shipping out to Australia, because I tell you right now, unless you're sending that boy like 30 cases of Arizona iced teas, you're probably not gonna break even on just the shipping cost. But 70 cents on the dollar, yeah. Abel out here hustling. Yeah, Abel always hustling. Abel always hustling. I remember when I went to Palm Beach convention for IM. I'm like, damn, $1 for. Okay. You came all the way out to Palm Beach for a convention for IM from Australia? Sheesh, that's dedication, bro. When Abel and I, and Ray for that matter, start throwing our in-person events, because, in the future, we're going to be throwing in-person trading events where we'll actually trade live with you guys, give you guys like 8, 10, 12 hours of sauce. hopefully you can come out again. I know flights probably would be crazy compared to the last time you came out, but if you came out for an IM event, believe me when I tell you, you know, you may want to consider the same thing for us. Let's see. So mad I missed that USOIL. Yeah, you and me both, Ray. You and me both. Let's see. Wait, do you check market every other hour all the time, or only New York session mostly? Entries on 5-minute candles nicely. Yeah, I mean, so I'm a degenerate, so I'm always checking the market, right? I'm always checking in. I always got an eye on price. I'm not always sitting here at the charts, you know. I got my phone, I could check quotes and stuff. But yeah, I'm mostly actively trading through New York. So like what we do on these Sunday calls is basically I set up myself for the week. Depending on what we're seeing, like last week when we were range bound, it was like, all right, cool. Let's find out what the range is gonna do. Let's find our entry, and then we'll play the move. Right. Last week again, we were talking about how CPI was probably gonna come out higher, the dollar was gonna gain that strength, and all this stuff was gonna move down. We talked about how it was gonna come into this wick. Right. We talked about all these things. You guys can go to last Sunday's call, you can verify that for yourself. Now this week when we look at something like this, it's like a question of like, okay, well, I'm not going to jump into this now, right? So where do we expect some demand to maybe come in the market? And then we align that, you know, with the fundamentals of the rumors, right? Those high volume kind of like activity points. And then we just trade off that. So yeah, Monday, you know, or I'm sorry, Wednesday during, you know, all of that stuff, if price is down here, yeah, we'll be actively looking. Now, when I trade live with the inner circle, what we do is we hop on in the morning. Right, we're live actually privately, right here on YouTube. It's not open to the public. It is open up to the inner circle only. But when we're live, all right, and we're doing that analysis, yeah, we're looking at, you know, intraday charts. We're executing off 5-minute, 15 minutes. But we're doing that in 4-hour demand zones. We're doing that in 4-hour supply zones. We're usually in the higher time frame areas, right? So if we liquidate this order block, plant some of this old demand, and we're looking at that, and it's in the prime time where we, you know that we're going to execute, then yeah, we look at the 5-minute charts, 15-minute charts, and we sit there and play that. I love 5-minute charts. 5-minute charts are my favorite chart. For execution, anyway. Let me rephrase that. 5-minute charts are my favorite chart for execution. I don't do my analysis typically on a 5-minute chart. All right. So what do we got? Do I miss anything in here? No, it doesn't look like we did let go of that time. The Arizona side hustle will be booming too. You guys with live in-person 5-day boot camps hosted in a mansion loading up 2023. I mean, that is the plan, man. All 2023, you know, catch me, Abel, and Ray in, you know, different cities, just providing you guys value. You know, we're gonna just rent out nice Airbnbs, you know, 6, 7, 8 bedrooms, and we're gonna just teach people in you know, in person, so you guys can see actually how we execute. Because us doing I mean, again, like Abel was live Tuesday through Thursday. Once I get my new setup, I'm gonna be going live during the Asian session as well, and you guys could actually see some of the execution stuff if you're not in the inner circle. But if you want to see that stuff in person, in life, really see, you know, what we do, our schedules and stuff, that's the best way to do it. That's the best way to do it. All right, any other final charts? Any other final charts, guys? What else do y'all got for me? Let me know. Let me know. Let me know. Let me know. Julian says he's there. Hey, listen, bro, we coming to you. We gotta have to do a little Texas tour, man. I'll be real with you guys. I miss all my people out in Texas. I can't even sit here and act like I don't. I love even just seeing Julian's name in the chat. And by the way, bro, my setup coming. So off the chart gaming, that's coming too, bro. You have to tell me what game you want. Let's see. Any other charts? Any other questions? Going once, going twice. Going once, going twice. If not, I will see you guys on the inside for some live trading this week. Sheesh, bro. This thing really did just sink, huh? I can't wait, bro. I'm so excited about this. I'm so excited about these dips. Actually, I had an Instagram post. I'm gonna share y'all Decentraland. I'm gonna share a quote that I'm about to post on Instagram for y'all. I have a post made and everything. What was it? It was the greatest opportunities occur when the least amount of people can take advantage of them. Right. So I don't know if anybody's ever said this before, but this is my quote that I need to remind y'all of. The greatest opportunities, guys, occur when the least amount of people can take advantage of them. Right? You guys see how expensive life is getting. You see how expensive rent, gas, oil, grocery, everything is getting. Right? So the people have less expendable cash. Right? So all these assets that are falling, again, these are some of the greatest opportunities that we're going to see in our lifetime, but they will occur when the least amount of people, unfortunately, can take advantage of them. This is why we've been stressing for the past year, to stack cash. It's where you can take advantage. Because I'm telling you guys, if you're between the ages of 20 and 30, this is your chance. Right? This is your chance, right? This recession, this depression, this is your chance to hustle, come out on top, and be that future, person that's sitting on top of assets that are increasing in value year over year, for 5, 6, 7, 8, 9 years into the next bull market, right? Don't let this opportunity go past you, right? And if you know you're not good at margin trading, if you know the market's always slapping you, stack that cash and go into those hard assets as they fall. Downloads, yeah, I got you, Julian, I got you. You guys want to look at a few, let's see. Hold on, you guys want to look at a few cryptos. Some people want to look at Decentraland, Mana. Yeah, I know the tag for that. All right, I mean, dude, like, I'm gonna be real with you. Analyzing these is mostly pointless, because these are not going to do a damn thing until crypto does. Right? Not going to do a damn thing until crypto, right? And you might be wondering why I went to this chart, right? This is the Mana versus Bitcoin chart, right? I want to bring something up to you guys. This is actually less relevant these days than when I started, right? But I don't like to look at altcoin USD charts. Right, I don't like to look at these. Like, Mana is below $1, which is crazy to me. Thank God I sold mine back at like $3. Right. The reason I look at the Bitcoin charts is because there's one of two things happening with altcoins. Right. When crypto is bullish, right, the only way things like Mana and Ethereum and ADA are a better investment than, say, Bitcoin or Ethereum or whatever it's paired with is if those charts are independently bullish against them, which means that, yes, people are buying Bitcoin, but they're also exchanging that Bitcoin out for things like Mana, Cardano, etc. Right, so we look at this chart because this shows us the true demand for Decentraland. Right, shows us the true demand of Decentraland. Right, so people that hold Mana right now, for week after week, have just been selling it out into Bitcoin, and then possibly even that Bitcoin back out for cash. Right, that's the typical way that alts are purchased. Most altcoins, if they're not available on an exchange like Coinbase, which this one is, right, most people will buy Bitcoin. They'll send it to an exchange like Binance or like KuCoin, and they'll exchange that for Mana, driving independent Decentraland, Mana, Cardano demand for that asset, right? So until you see Bitcoin strength, this is not going to do anything. Because if people don't have faith in Bitcoin and Ethereum, Trust me when I tell you, they're gonna have no faith in any altcoin. NFTs are a little bit separated from the market, but even now you can see a lot of NFT values are taking a hit. Whether it's Bored Ape Yacht Club, whether it's any of the airdrops from that mutants, whether it's the Moonbirds, or any of those blue chip crypto punks, right? They're all taking hits because people don't want to be in any asset for that matter. So for you looking at these charts, bro, this is all irrelevant until Bitcoin starts its new cycle, right? So I don't really know what you're looking at on this in terms of like buy areas because none of it matters until Bitcoin hits its halving. But if I was gonna give you like mana Bitcoin levels, I would look at this thing literally making new all-time lows, right? I would fully expect this to make new all-time lows. And if you want to kind of know why, I mean, for one, hold on. For one, let's get a chart that's not Coinbase. For one, yeah, right, okay. So it's not all-time lows. But I would expect these lows, right, all the hype from the mana, metaverse kind of pump to get liquidated. So mana, based off this, again, 40%, 50% drops still incoming. So it's at 74 cents, 75 cents. You're looking at like a 30 cents mana incoming. Same thing with ADA. If we go to ADA, this is probably even uglier. Yeah, see, this has already kind of erased most of its moves. I would fully expect ADA, again, another 50% cut down below these structures. 1851 in terms of sats, easily cutting 50% down to the 850, 890 sat mark, right? But if you're buying altcoins, when the charts on Bitcoin and Ethereum look like this, I'm going to just be real with you. I don't know what you're doing. Right? Why are you bullish? Excuse me. Why are you bullish any sort of altcoin? You're just making life harder for yourself. You're just going to be taking giant hits for no reason. Check Celsius's tweet. Can you just share it with me? Check Celsius's tweet. All right, we'll check Celsius's tweet. Oh, this is not good. Celsius is pausing all withdrawals, swap, and transfers between accounts. Acting in the interest of our community is our top priority. Our operations continue, and we will continue to share more information with the community. But why? It's so funny. Their tweet yesterday says swapping coins with Celsius takes less time than it took to write this tweet. And then now they stopped all swaps. So that's bad marketing. I'm not going to read the full article. I don't know why they're pausing all withdrawals, swap, and transfers between accounts. It says they're acting in the best interest of their community. That seems like there's some sort of exploit or hack or something going on with it. They didn't specifically say in the tweet that is the case. All the replies are not good. I want my fucking money. You have no right to freeze my assets. Listen. That is what happens when you guys use centralized services. When you use a centralized service like that, I mean, Celsius claims to not be, but it's owned by a foundation that kind of dictates things like that. So to some degree, it's centralized. Yeah, trying to catch a falling knife. Oh, it's in the Discord. Yeah, I mean, I just read it, but yeah, you did put it in there. Yeah, I mean, do you have money in Celsius, bro? Like, is that somewhere that you have? Is that why you're asking? Because at this point, there's nothing you can do. You just play your. I mean, they have control, right? This is why we talk about self custody is key. If you guys have crypto and you don't own a private key to it, then you're at the will of these companies. You're at the will of these companies. No, I just found it interesting. Yeah, I mean, listen, it's what happens when you deal with somebody that has some sort of centralized power. You give them the ability to freeze your assets. Now again, I don't know why. Maybe there's an exploit. Maybe there's something they don't want to reveal to the public. Maybe they are doing it purely out of your safety, and they're just not giving enough information on it. Now that's not a good look, because they're going to be, put into this position where, that first response, like, these people are pissed. They can't get their assets. They want to get their assets. Some people probably want to sell. Some people probably looking at this like, yo, I want to get out of this market. And, it's not up to Celsius to make that decision. But if there's some sort of exploit going on, which is, by the phrasing that I saw, kind of seems like it, if you have your safety in mind, it's normally because I might need a video on that alone. I mean, listen, like, crypto security is like a big thing. It's a long thing. It's not something that I mean, I could probably make a video on that. But what we'll probably do is we'll probably like run like a boot camp. We'll probably run like a 3-day, 4-day, maybe 5-day boot camp on cryptos, and we'll just go over everything from, security to fundamental. We'll just go over everything. We'll get technical with it. Alright, family. So yeah, it's 11:25, fam. I think we're gonna wrap it up here. You guys have the plan for the week going into things. You guys know we're not chasing these moves. We're gonna wait for that Fed news. We're gonna see if the Fed is going to remain on their path, or if they are going to continue to get more aggressive. If you guys want to live trade with us this week, then I do invite you to join the inner circle. I'll even throw you guys a little bit of a discount. You guys can save 33% doing that. You guys can come, make your money back in the first month, ride out with us. If you're not happy with the service, then, hit me up and we cancel. Such is life. We will be live trading all week. I'll see you guys Tuesday, Wednesday, Thursday if you are on the inside. If you guys are not, I will see you on Wednesday for live FOMC. I'm 90% sure I'm going to hop on here for live FOMC. What is your portion on C-Day? On C-Day. On C-Day. What is that? Elaborate before I get off. Elaborate. What is my portion? I feel like autocorrect smacked you there. Oh wow, that URL is not even clickable? RIP, I gotta fix that. What do you mean, though? What do you mean? What do you mean? Let me answer your question before we get off. See if you could break that down for me. Coming up in December? Bro, it is June. What is C-Day, though? I don't know what you mean, bro. In December, the only thing that I know that starts with a C is Christmas, which I don't think has anything to do with the markets. I mean, markets are typically propped up for the holidays, but yeah, you got me all sorts of confused. Coming up in December. I was watching a video talking about how during C-Day the crypto market will pump. So the only thing happening in December that I'm aware of, and I don't know why they would call it C-Day, is ISO 2022 going live. Or not 2022, 20022. 222. Yeah, I don't know what it is, to be honest. At the end of December, though, December 31st is the cutoff date for ISO 20022 goes live no later than December 31st, 2022. Because it technically goes in place January 1st, 2023, which is the same thing. So that is the only thing I know that's happening in December/January. The institution cutoff for this, though, cutoff is November of 2022. This is the only thing that could potentially give a nice pump to the crypto market. Now, whether or not that holds is to be seen, but this is the only thing that you could look for that's going to be like macro bullish in terms of news going into the end of this year. And if you don't know what ISO 20022 is, just do a Google search for it. It'll come up with a ton of resources. You'll see a lot of big institutions. You'll see Ripple's website. You'll see JP Morgan talking about it. You'll see Swift talking about it, which is the groundwork for your entire economic system. So yeah, just do a quick search for this and you'll know what's going on with that. But yeah, I love and appreciate everybody that was on here. I will see you guys later.